Good morning, everybody. This is the morning meeting for the ARMR report, stands for Algorithmic Risk Management Research. I'm your host, Brett Rosenthal. This is a live trading desk. I'm sharing with you how I get ready for the day. I manage my own personal capital, that of high net worth investors. All the business is run through Interactive Brokers. You can check out our website, rosenthalcapital.com, and you'll see what our three model portfolios look like. And that's where at Interactive Brokers, individuals can link their accounts to these three model portfolios. They all use proprietary algorithms that we've written and we're constantly revising and writing, along with fundamental analysis of companies and investment themes. So we're managing our capital in the stock market with the traditional resources of meeting management teams and breaking down balance sheets and income statements and making projections on growth and whatnot. And we're identifying themes that we think are important. Those of you who follow the ARMR report know that I've been talking about the cannabis stocks since August 15th, the day Constellation Brands put $5 billion into Canopy, total of $5 billion, okay? So that was the dinner bell ringing. We had a big run up in those stocks. Then they created. I'm going to talk about that in a second. But what I want to do on this call, make it very brief. It's just a morning meeting to get your mind right so you are prepared for day trades and investment decisions. I want to start every morning. I'm doing this for myself as much as I'm doing it for you. Thank you for listening, because it keeps me honest and it helps me continue to execute correctly, even with algorithms, even with doing this for 30 years. Every day is a struggle to make sure your emotions don't get involved, greed doesn't get involved, your ego's out of the way. And the best way to do that is to start the day remembering what every decision you make should be based on. After you've done the research, after you've decided what you think you need to be doing from an investment standpoint or a day trade, ask yourself this two-part question. And if you don't like the answer you get, then you cannot execute. Step one, after you've done all the work, will this investment or this day trade put you on the right side of probabilities and statistics? If the answer is yes, then step two is the expected reward from here worth the risk I have to take? If the answer is yes, execute. If the answer is no to either of those two questions, take a step back from the screen, do some more work. Figure out what the right entry should be. I'll give you an example. You all know I love the cannabis stocks. I've been talking about it nonstop. This is the single best investment theme that I can see over the next 3 to 5 to 10 years. The single best place to have money. I've been doing this 3 decades, more than 3 decades professionally. And I've come across huge investment themes, usually 1, if you're lucky, 2 a decade. That's it. Everything else is just noise, people chasing things like Micron, which is to say kind of commodity businesses that boom and bust. And the stocks go up and then they go down, and they're not really the place you want to have capital. Investing is about opportunity cost of money as much as it is the investment opportunity. Do I want to waste time investing in JP Morgan, Goldman Sachs, General Motors, when I can invest in Amazon or Google or Microsoft over the last 10 years? Sure, I could have made some money in the other names, but you'd make so much more money in the right names. That's opportunity cost of money, guys. I don't want to just buy stocks that will perform in line with the market. If I'm going to do that, I may as well buy the market. And I have lots of great ways to buy the market and outperform and build alpha and not have to take the risk of an individual stock. So if I'm going to put money into an investment theme and an individual stock, the reward has to be worth the risk I'm taking. Now, assuming we all have stop losses on every idea that we take, I assume that you already know that that's important, so I'm not going to waste time on that discussion. Let's just pretend your average stop losses. I'm just pulling this out of a hat, guys. This is not my stop loss. I'm just pulling out of a hat. Let's just say the average stop loss 7%. You could buy a commodity type company that has cycles that are booming and busting. Or you could buy an Amazon over a decade. What's the potential reward? See, that's what I'm talking about. You might get the entry right. Now's the time to buy stocks for whatever reasons. And of course, we use algorithms for that. And I go over that every day at 12 o'clock. What the 5 big algorithms that we've written for the big indexes, the S&P, the Dow, small cap index, the NASDAQ, and the momentum index. Those 5 algorithms drive our investment decisions. You might have other reasons that drive your decisions. But what I'm saying is once you get that decision, you say, I want to put money to work. Put money in the investments where the reward is dramatically worth the risk. If you cut all your losses at 7%, then your risk is basically the same, whether you buy General Motors or Goldman Sachs or Canopy. Right? They go down, you're still cutting your loss at 7%. It doesn't make a difference which one. So the question is, which one's going to make you more money over the next 1 to 3 to 5 to 10 years? In our estimate, it's going to be the cannabis stocks. So we focus there. Do I run after them and buy them right now, though? See, that's the question. There's that 2-part question. Probability, statistics, reward, risk. The reward risk is phenomenal in these stocks. Guys that have missed the trade are like, well, do I buy them today? You definitely don't buy them today, okay? Because the probabilities that these things come back down and test their recent breakout are high. They're high. There will be another entry. There always is. And when you get that feeling inside that you're missing something, please, please step away from the screen. Don't click the enter button. Just stop and recognize what you feel inside of you, which is panic because you're missing your favorite investment. It will always come back. They always do. Okay, what are you going to say to me? Brett, what if it gets taken over tomorrow? Okay, that's a 1 in 100 shot. Is that the right probability side to be on? Could be 1 in 1,000, 1 in 1,000,000. Those aren't reasons to invest. Do you understand me? Probabilities and statistics. Get on the right side. Okay? Reward versus risk. Now, I was in the middle of a call at 12 o'clock yesterday. We got bounced out, had technical difficulties. I'm going to go over it. I'm going to continue it today at 12 o'clock. We are developing right now. I'm sorry I wasn't here yesterday in the morning, but we are literally knee-deep in building a new algorithm for our day trading of the equity markets, the indexes of the triple Qs, the S&P primarily is what we focus on. And it's an outstandingly the reward versus risk is phenomenal. And the probabilities are in excess of 90% at the moment as we do research. So what we do is just to give you a look inside and how the factory works when it comes to algorithms. As traders, as investors, we come up with plans of attack, how we want to build an algorithm. This is what we see occurring. And now what we want to do is we have to work with our coding department to write the code exactly as the trader, me, sees it. And then coding department has to constantly backtest and automate and refine to really get to the kernel of what the trade is. It's a very exciting trade. It's centered around extreme volume spikes. When we get extreme volume spikes after major rallies or declines, and we get reversals from those spikes, that's when the trades get put on. Sometimes it happens in the first 15 minutes of trading. Yesterday was a perfect example. I'll share a picture with you. Okay? What you're looking at right now is a picture of the NASDAQ 100. That yellow box that you have right here hope you can see this. I'm going to give you a little green arrow here. All right. That yellow box right there. These green, there's some green dots. I'm going to show you with a quick highlight. Okay. These green dots right here. Okay. Tell you that the market gap down on big volume. And what we're doing is we're buying the market after the closing bar, which is right here. This is the bar. Okay. Oops. Let me do this. What we're doing is we're buying the market if there's a close, okay, above the high of a bar that made a new low on the day. So this is right in here. This second, let's see if you can see my arrow, okay? We're getting long there, and our algorithm doubles the position right in here. As you can see the arrow, caret, and we get this trade as the market tries to go back and close the gap. That trade is working at a ridiculous clip. Okay? So I just gave you a little inside information on how our algorithm is built. You're not going to get that on a lot of YouTube videos. I just shared with you a technique that's making us a lot of money. It's not just gap downs. It's any time during the day the market makes a new low on the day. Let's say if I'm looking to go long, market sells off, makes a new low on the day. There's a volume spike and a reversal above it. We get long at that point. Then, of course, I'm giving you just some insight. You have to figure out how to gauge what a volume reversal looks like. How do you get that green dot, right? So I can't hand you the keys to the Ferrari we're building, but I can give you some thoughts on what to look at if you're a day trader. Look at volume spikes after big moves that last at least an hour. So if the market's up big or down big for an hour, you determine what big means. You determine what volume has to be. Okay? And then you have to figure out what your stops are. These are all things that we're developing right now. And it's hard for me to get on and do these calls constantly because I'm spending every waking moment. I mean, we're up all night working on this because it's exciting. It's like a fish on, when you finally get a piece to the puzzle where you start to see through the matrix, you just can't sleep. So that's what we're working on right now. So I'll share with you more information about that. 12 o'clock today. We'll go over the big indexes at 12 o'clock today. And we'll focus again on our two favorite groups, the precious metal stocks and the cannabis stocks. We'll check in there. All right. I hope you guys do well today. Be safe out there. Think before you trade. Get yourself on the right side of probability and statistics. Okay. Make sure the reward's worth the risk you're taking, and be honest with yourself. Listen to yourself. If you feel like you're making decisions out of fear or greed, walk away from the screen. Okay? Take care, guys. Good luck.